Hey guys, welcome back to the channel. This is going to be the third episode of Trading with Grogu, where I talk about what tools I use to trade, how I look at the markets, and how I implement those tools in different market conditions to take educated trades every day. Today we're going to be talking about fair value gaps, or some people call them imbalances, though imbalances I usually refer to when I'm talking about order flow data, which we'll get to later in the series. But today we're just going to be talking about what are fair value gaps and how to use them. Today's going to be a bit of a shorter video, but hopefully it is still helpful. So what are fair value gaps? Fair value gaps are areas which indicate an absence of balance between buy and sell orders. Because if there's this imbalance, we expect price to fill these areas in order to balance the market out and grab any excess liquidity. So how do we identify fair value gaps? Fair value gaps are found by the area on a candle which price has not come to with any other candle. That might be a bit of a confusing definition, so let's take a look at two examples and hopefully you can see how to chart them. So right here we have the Bitcoin chart in the 15-minute time frame. You can see that we were in an uptrend right here, and you can see right here we have this big green candle, and next to it right here, the only time this price was met was this with this wick, and the candle after this big upwards candle right here had this wick downward. So the fair value gap is in this zone from this wick to this wick because price in this area has not been met other than this one candle. Right? If the next candle would come down and fill this gap to this wick, there would be no fair value gap. But because this candle is the only time price was met here, we have this fair value gap. Let's look at another example, but now this time in a downtrend. So it can be either way. And this is the Ethereum chart in the 4-hour time frame. So this is when we were in a downtrend. You can see this candle here had this big wick down, and then we came down with this big other candle, and then the next candle next to it had this upwards wick and then continued the downward trajectory. So the fair value gap here is this wick to this wick because this area of price was only met with this candle. So we have a fair value gap in this zone. So just a little note on fair value gaps. I like to stick with finding fair value gaps only on time frames that I'm trading. So if I'm trading the 1 hour, right? When I'm trading 1 hour, sometimes I'll use like Fibonacci levels from the 4-hour or even volume profiles from like the daily or something like that, but really fair value gaps I only use on time frames that I'm trading, so I only look for fair value gaps on the 1 hour, and found that they have a higher probability of filling when the market is ranging compared to a trending market. And of course this is also in the time frame that you're using. So if you're in a 1 hour range, you're more likely going to be filling those imbalances. Rather, if you're on a 1 hour trend, you're most likely not. So just some closing thoughts on fair value gaps. Fair value gaps are typically found in conjunction with low volume nodes, which I covered in my last video, so if you don't know what those are, go watch that last video, and can be a great confluence to add to your volume profile. So hopefully this video is somewhat helpful. Please like and subscribe down below. If you want to join our Discord server, it's completely free. There are a lot of good traders down there, links down below as well. And if you are interested in leverage trading Bybit, we have 30% off our fees. Down below, maker and taker, so 30% off your fees if you just sign up with an account through that link that's down below. Hope you guys have a great weekend, and I'll see you Monday. Thanks.